How's everybody doing? I wanted to start this video off by saying there's going to be a little bit more makeup on the chart than I like to put, but it's going to be for obvious educational reasons and trying to see these things without having to mark them out. I also wanted to cover one thing that I saw in the comments of being a hindsight warrior, right? I always try and cover, right, trades that I take live in the Discord, right? I don't usually cover trades I don't take, and if somebody else took the trade, I'll cover it. But usually most of the trades, like 90% of the trades I show are trades that I've taken, sit in the Discord, and one probably already have explained in the Discord and gone over with, everybody with. But yeah, I just wanted to cover that real quick because, none of these are hindsight. Every trade I show is, 90% of the time, taken live and then covered after the fact. We'll go in a video over, or excuse me, we'll go over in a video how I like to use this small little zone as a retracement zone for a very, very precise OTE entry. And it doesn't even have to be precise from time to time. You can always find an entry with the high resistance, high or low. And within those key high or lows, find if we displace our turtle soup to high or low. And one example here, right, we see us coming into OTE of the range, right, created from this high to this low. And this was the right higher time frame, right, manipulation lower to then run higher, running into the breaker from over here, and then running higher, blah blah blah. We see this low, right, not displaced through and turtle souped, right, making this low high resistance and then forming low resistance liquidity to be ran for later, right? We then come into this after this lows ran and closed back within the range and displaced through the range. We see that this high becomes our key high, right? We run high, SMT, close back within the range, accumulate, manipulate, and then distribute. Keep this in mind for the whole video, looking for high and low resistance liquidity in right trend lines such as this, right? We see this formed, trend line, right? Even this, right? We see this formed in trend line. And a big key point to take away is that you need to keep your daily and weekly profile in mind. That's why so many traders fail intraday into longer term, right? Understanding your one shot, one kill of the week into intraday is super, super key into being able to hold into your draw on liquidities, right? We saw in the video from Monday with the NFP trade, it wasn't the best entry. It was still in a discount, but it wasn't, nowhere near, in a premium into OT where I wanted it to be, right? But we're still able to hold and get over 150 points. We're going to go into hop into the notes now. Just keep these in mind while you're reading along. Obviously, right, we have market maker models, right, accumulation, smart money reversal into your reaccumulation phases, right, with your key highs into your key lows of the market maker model. But right, keep all this stuff in mind and all of our key, concepts into coming into this, and you'll see how this is high resistance, right, with these turtle souped lows, turtle souped low, right, from the accumulation into the order block, and how these turn from low or high resistance, at the time, because we're on a 4-hour chart, into low resistance liquidity. And then all you have to do is zoom in and then use the daily and weekly profile. So go ahead and align yourself within order flow and find, right, the daily range of the candle, whether it be the daily or the 6 or 4-hour, or the 6 or 10 4-hour candles. Let's go ahead and hop in the notes. We often see, right, that look high resistance high put in a situation like this, right, with this being our high resistance high here into the turtle soup. And if we want to see a high resistance low put in, right, we see usually kind of the same type of thing, right, with the low ran, right, and us coming into the high resistance high, creating it here. And you know, it doesn't always have to look the same. It will look a lot different on a lot different time frames, so you just have to align it and understand your narrative. With our key concept that we're going to be looking at today, we have our low resistance liquidity runs, and they occur when price retraces on a higher time frame while creating failure swings on a lower time frame, and these runs indicate where price areas is less opposed, allowing for smoother transitions. These protected highs and lows, right, are very vital in understanding our CSID. But first, I'm going to show you what these low resistance liquidities look like on a higher time frame and a lower time frame. Looking at this piece of price action, right, we see higher time frame, our breaker created, running into the order block, delivering lower into our low resistance here, which you can see with these trend lines, right? But if you don't know that that's a trend line, you don't know what low resistance is, right, it's hard to spot it. After, right, we break the low and turtle soup back into the high. Turtle soup the low and run back into the high, right? We have another key high, right, because we displaced, reaccumulated, and out of this small reaccumulation, lower time frame, we ran higher, and then back lower, right, to our drawn liquidity. After that, it warrants a small retracement, right? Our retracement SMTs the high and then runs lower. Lower time frame, right, inside of this accumulation, right, and then break lower, right, we have our lower time frame, accumulation, break lower, reaccumulation, break lower, into your, right, smart money reversal, into your high resistance liquidity, into your high resistance low being put in, right, into your low resistance liquidity run. Right, we see that a trend line, you know, has been formed right here, and even, you know, if, right, this high is turtle souped here, right, if it makes sense, you know, for a turtle soup, right, above an accumulation range into a PD array above, right, it makes sense to turtle soup that range, same as we saw on Friday, turtle souping the NFP high. Right, and then after this, we see us continue higher. We see us usually break and leave a breakaway gap, and then continue, right, reacting to order blocks in a very aggressive manner, and then sometimes, right, retracing very aggressively and then running higher very quickly. It looks a lot different very many times, but it looks different but looks the same, right, with whether it looks like this and then our quick run, right, with the SMT here, and then understanding that we'll need the retrace for the kiss of death before our final movement lower, and then understanding that this, right, manipulation leg was very violent. The distribution leg is going to be violent as well. These small bodies lead into big bodies, right, and you'll see that everywhere. Right, these protected highs and lows are crucial for market structure, and right, we see them after a sweep of a higher low into a high time frame premium or discount array. When price sweeps a higher low and enters a significant high time PD array, it often signals, right, that we can have a reversal, and then we would like to see it signaled with a CSID in the opposite direction. Right, following the sweep in the CSID, the formation of lower highs or lower lows on the low time frame indicates fading the high time frame order flow, indicating, right, and that happens during, right, high time frame retracements. We like to see our high time frame SMT, and it adds confluence to our higher resistance liquidity levels. These divergences at key levels increase probability of successful trades, as I've showed the high time frame and the low time frame inside the high time frame. It's also crucial to distinguish between significance of high time frame SMT signals and less reliable lower time frame signals. When we only use the low time frame, right, that's when we start to fail. We need to use the higher time frame, and it'll indicate it'll indicate whether price will break a higher low before running into higher resistance. Failed PDAs and opposing high time frame PDAs create high resistance and low resistance liquidity run. Right, price will often seek to fill imbalances and efficiencies, targeting highs and lows. However, it might not always follow a retracement pattern due to time constraints, right, accelerating towards liquidity levels. Once we see efficient price delivery and balanced priced areas, we no longer need to deliver back to them and will start to spool towards our liquidity levels. This liquidity induction from trendline traders often exploits, the behavior because it's simply dumb, right? Price manipulations often target trend lines, indicating false breakouts to capture liquidity from the stop loss orders placed by trendline traders. Right, sweeping key highs and lows, then reversing. Smart money will trigger the stop losses, and dumb money will just enter in a poor trade, whether it's a pattern trader or no matter what it is, right? Millions of people will try and trade the breakouts above highs or the breakouts, after we break a trend line or start smacking against a trend line again. However they like to do it, right? Creating retracements that lure trend line followers into positions just before capturing their stops is a good way to think about, right, how we engineer retracements. It's just super vital to understand liquidity and how it is engineered, and it'll keep you, right, in a more psychological bound, because you won't be so much worried about retracements as you'll know that it's needed, right, in order to move right in the direction that we need to. Right, these protected highs and lows will keep you safe, and right, that's often where your stop loss should be, indicating an invalidation of your idea. We use the change in state of delivery, the impact of the SMT, right, to add layers of confluence into our trading strategy. Right, I say recognize these patterns, but they damn near are patterns with the right narrative and just understanding the same daily and weekly profiles, day in and day out. Right, it's if then, and it can constantly change, and you have to be on your toes. And sometimes good weeks we just get a easy one shot one kill from a Monday or Tuesday into the rest of the week. We can easily anticipate and react, right? And we don't have to so as guests, it's pretty simple just to follow the rules, and even if you are feeling you're in the wrong side, right, just don't take a trade and wait till it's very obvious. Even this last week we got seek and destroy into Monday, Tuesday, Wednesday, right, and then Thursday had a reversal and went ahead and expanded. But we had an Asia smart money SMT and a reversal in Asia, so it's just very very unfortunate for whoever trades the one that doesn't get SMT'd, and that's me being in queue, especially for me, aiming for that draw to be hit coming into a Thursday reversal. It happens. You just have to stay safe, and that's also why you enter in a discount longing, because then you have a good chance of being able to see when that SMT occurs in premium and be able to flip your bias, and not flipping bias every single day. Like I said, align it with the profiles. For your key takeaways, right, you need to understand how is liquidity engineered with retracement and failure swings, understanding high resistance liquidity, and understanding low resistance liquidity, right? We will have high resistance liquidity runs and low resistance liquidity runs. You just need to understand when and why we have them, and always take the path of least resistance following low resistance liquidity runs. Understand the concept between protected highs and lows, and when it's protected, it will act as so, right? We'll sweep a high or a low into a high time frame PD array. I don't know why that's there, right? We will fake market structure shift into the high time frame PD array, right? Then print a lower, higher low, low time frame fading the high time frame order flow, right, into a high time frame retrace, right? Always trading with high time frame order flow, allowing the high time frame SMT to add confluence to high resistance liquidity, and understanding that it's even more high resistance. I know we can often fade lower time frame SMTs because I know, right, the price will break the higher low, or the higher low before running the high resistance liquidity and or the low resistance liquidity. It's just an understanding of chart time and the core concepts. you need to understand, right, with order probing and failed PD arrays, right, and opposing high time frame PD arrays, right, they create high resistance and low resistance liquidity runs, and stop low resistance liquidity runs, or excuse me, right, and then low resistance liquidity runs will always seek to fill imbalances and efficiencies, take out highs and lows, right, but price does not always need to retrace, right, during these low resistance liquidity runs following order flow. Price may want to accelerate to liquidity levels due to time, and whether that time being the end of the day, or whether it be a certain session, just keep that in mind, and keep that in keep it in mind when you're going on the chart and looking over on your own notes and everything. So I really like this piece of price action here, right, because it shows, right, our key low doing what it needs to do, right. We don't displace through our key low in a discounted price array from our high to our low, right, looking from the weekly as well, right, from high to low into the 4 hour, putting our makeup back on the chart, right, we see that we didn't displace past our low, so it indicates a turtle soup into a run higher, right. We see with our 4 hour breaker that we don't displace past the high, right, and we also have an SMT, right, after a reaccumulation, right, and then this becomes our key low, right, because it's the open low high into the turtle soup low into our discounted PD array of the smaller time frame high to low with our high resistance liquidity run, right. We don't close above with displacement, but we do get our manipulation into an open open low high close. We react from our order block breaker block order block fair value gap, but we don't displace lower, right. We just go ahead and react here, and then react again, and then reaccumulate. And actually this was the trade I took to this obvious high, because we knew we would have to run this, then to go ahead and run lower with the Tuesday high of week profile SMT, right, these key highs, these key equal highs, right, also spotting our market maker model with the accumulation. But right, with our key concepts of the video, we're going over, right, trend lines. So after we see, right, our key level taken, we understand that we're still bearish, right. We haven't displaced above a higher high, right. We've just ran this low, turtle souped it, and now have came to retrace into our internal highs. Into our internal highs, right, we see no displacement higher, into an induction of liquidity here above this high. So we fade the first soup, come into the second, and then move lower. We also see, right, above our key high here, right, key high and key high, displacement above this warrants a reaccumulation into, right, a soup, accumulation, manipulation, distribution higher into, right, same protocol, right. If we look on ES, it did the same thing, right, ran above the high, reaccumulated, ran the high, and then turtle souped. From this, we see our low resistance created, right, with the London low, previous day, liquidity, and then previous week low liquidity, previous week close below, right. So we have, previous week close liquidity below, and the daily profile with a Tuesday high of week sitting in with our SMT turtle soup, right. We don't run this high, but we do run this one, so it's still valid. We close back within the range inside 10 a.m. and start to displace lower, as well into, right, these two lows, right. But you see us close back within the range here, and you'd be like, oh, in this, high resistance now with us closing back. But you have to understand your narrative and where and why we're delivering to and to and from. So we see our trend line formed. Actually, I'll come back, and then I gotta go back here. Right, and with that trend line, we see the first turtle soup into our order block PD array, fair value gap as well, and then our SMT above the key high. right? And then, just like butter, we form our sequence, CSID, react to the order block here. We then move lower, breaker with the NWOG, right? And then never displace past the NWOG, right? On the 1 hour, we come in at 10, and I think we also had an SMT here into the 4-hour candle opening, into right the high into the actually, excuse me, into the 1 hour SMT. I'm being dumb. As well, right? We see once this high is swung and then the low, we have a balanced price delivery, right? So price should continue delivering lower, and it does. It's one thing to understand, right? Same here. Once we deliver past this high, right? With the NWOG, soup into the NWOG, deliver higher, right? We shouldn't have to break this low to deliver higher, right? We see we continue to the high, then same thing. We come into our range, and with Monday high of wheat, right, it doesn't make sense to go ahead and run this low, right, because it's our turtle souped low into the breaker, right? So we should deliver right into our low resistance liquidity here, and then we do, and then leave right even more low resistance liquidity behind. Asian accumulation, London manipulation, New York distribution, right, into a higher time frame, accumulation, manipulation for our weekly profile, into our daily right range delivery. And we're not using right trend lines to catch our trades. We're using them to right understand which liquidity level has a better chance of being run. I understand how this one can look like a high resistance liquidity run because we've turtle souped and closed back into the range, right? But with our daily profile, into the weekly profile, into the PDA above, and where we're delivering from below here and here, right? This low has become our high resistance low and shouldn't be ran and should be protected. We come into our area, right? Fail to close below. And fail with displacement, right? If we would have displaced lower, right, I would have waited for more of a reaction and seen from there, right? We see lower time frame we had a CSID, but we see our reaction from our rejection block, and hourly as well, right? Our reaction from the rejection block, and then our low is protected, and we see it act as so. Once we see our CSID above, right, on the 15-minute, right, it's a little bit late in my opinion, so you're in low time frame for intraday, right, coming into the 5-minute here, right? And this one was pretty easy to catch, 5-minute CSID, you just have to trust in it, and even 5-minute rejection block for an even better entry. But yeah, even here, right, I think I got stopped at break even because I just didn't want to hold through this. But right after we saw even more reaction, I just got in one more time and whatever. Right, either way, right, I should just keep my stop below the protected low until we run our easy hanging fruit, our easy low hanging fruit with the start of our trend line resistance. And like even this high we didn't run, right, and just induced more liquidity with equal highs and double tops, which we'll go over why don't work. Right, and we also see our anticipated failure swing right here, into a higher time frame candle failure swing, which can allow multiple taps into that PD array, and then run higher, which why we sometimes get double tops and bottoms on like the 1 or 2 minute, but higher time frame is just one candle. One thing that you would be thinking right now, if you are sitting through the video, you're like, well, when do I know not to attack the trendline liquidity, right? In a situation like this, we have trendline liquidity above, right, equal lows, and trendline below. So it's like, we're stuck, in between an accumulation range. So what would you expect to see? Right? We have, right, what you think may be a turtle soup, right? But coming from our daily and weekly profile, Monday low of wheat, Tuesday delivery, right? Wednesday should be a classic buy day. Our overnight accumulation settles that there's no retracement warranted and that we should, right, accumulate, right? And all this is, right, our double manipulation like we've talked about, lower time frame, accumulation, manipulation, distribution into your higher time frame, accumulation, right, manipulation lower, distribution higher. Okay, so let's go ahead and take that off the chart. And we notice, right, if it would make sense to go ahead and take out, right, our 6 and 10 low, let's mark that out. And so we see, right, coming in the hourly chart, our 6 opens, moves lower, right? So it makes sense for our 4-hour open low and high close, and to take out this high before 10. So we come into the 15-minute. See it's 7:45, and like always, we want to wait for our 8:30. We see 8:30, right, break the low, SMT this low, and this low. There is now an SMT turtle soup formed. The 15-minute closes back within the range, right, and we formed a rejection block. 5-minute, right, closes back within the range. We see we react to the wick, form a longer wick with equal highs, right? We now have an inducement of liquidity. Oh man, sorry about that, right? But we see with our 8:30 manipulation put in, right, we formed our 6, our 6 open low with our pre-market manipulation, taking out our London low and our Asian lows, as well as our previous lunch liquidity. We know, right, with Wednesday, we have previous day liquidity above the high. And what we have done now is taken out one trend line with our narrative for our when, where, and why. We should reverse and have a protected low. We see that we go ahead and, right, induce more liquidity into the high, right, and react once again to our rejection block, right? We check the 15-minute, right? We see we have our green candle formed, 2 equal highs, and we come one more into the wick. But we see the key point here is that our protected low, right, after taking out the trend line, low resistance becomes high resistance and fails, right, to create a lower low, right, with that 8:30 manipulation into your 9:30 candle, right? With your 9:30 candle, it should spool to the draw on liquidity. So if we're bullish, right, we should break this high with a fair value gap, reaccumulate, and continue higher. We see that we get a bullish open, leave a fair value gap, right? And we go ahead and don't even need the turtle soup, right? We just use the wick. And then I can't go lower time frame on the 1 minute to show that we, right, probably had, right, one candle form. It souped, closed back within the range, and then only needed to return higher, right? A lot of the times, one big manipulation candle is all you need. And even here, right, on the 15-5-minute, we've come into the 15-minute fair value gap and taken out the high before 10, or right at 10. And we, notice as well that we've souped, right? And for the daily candle, it makes sense that we're probably going to keep, continue running higher. We come in with our final kiss of death, right, into, right, our 15-minute rejection wick. And most likely SMT below the low, right, below these equal lows, maybe into the order block one more time, right? But we have left the breaker, we have balanced the price range, and it should leave this fair value gap open and go ahead and continue taking out what we formed one more time as trendline liquidity, right? and distribute, reaccumulate, and distribute higher. And we see, right, distribution, reaccumulation, distribution again. And so just because we've now formed a trend line lower, right, doesn't mean we're going to take it. Okay, we're not trend line traders. We are just using the phantom trend lines as, you know, a measure for our low resistance liquidity. We have to still use our classic, you know, institutional order flow narrative, right, along with targeting, you know, our obvious draws on liquidity, along with our daily and weekly profiles. There could be more examples to show you, but I'm just going to leave this one here. This has been a pretty decently long video, but I want you to, you know, take this, you know, moment to look on your own chart, right? You know, seeing, right, our breaks above our breaker, then reaccumulations, always warrants no retracement. You see it low time frame, not always. Let me take that out before somebody puts it in my word, puts that word in, you know, the wrong way. Right, you see our expansion, reaccumulation, soup, higher, reaccumulation, right, into the wick, rejection higher, reaccumulation, soup, rejection higher. And then we come into the 4 hour like we just showed, right, soup, these lows, right, reaccumulation, breaker higher, right, we have our trend line liquidity, soup it, right. Now we don't really have trend line liquidity here, but if we pop in on the 1 hour, right, we see this trend line, right, and then these two here. We break the high, form more trend line, come in with our narrative, and break higher. Okay, so I hope this is, right, pretty simple to see that it's not a pattern, and I'm not pattern trading it. I'm using it with my narrative and understanding, right, our high and low resistance lows, and, right, our tendency to run low resistance liquidity before we run high resistance liquidity. Right, to take out this high, we need to run these low resistance lows to then create a high resistance low that then can push us higher. And as we see, for one more time, where do we come into and react? And then the daily, right? Sweep, break higher, back down into the range, then move higher. And as we saw, right, even on this candle, right, under OTE, failure to close, reaction higher. And that's how you guys can use, right, these smaller trend lines, right, to understand where the low resistance liquidity is versus the high resistance liquidity. Just please keep your narrative of when, where, and why, and don't pattern trade it. I hope you guys enjoyed this one, and I'll see you in the next one.